Hello everybody, welcome to this market report. Today we're Thursday, May 21st, 2015. My name is Christian Charlo. Today folks, I want first of all to make a follow-up on the last market report where we had a rally that was led by the technology and industrial sector. So I want to make a follow-up on those stocks I've shown you in the last market report and also show you today why the TSX has been the best performing index and which sector has allowed the TSX to be the best performing index compared to its American peers. So first of all, let's take a look here at the situation on the SPY. Since May 14th, the SPY was testing its resistance, and since then, the SPY has been able to actually make a rally. However, this rally has been short-lived, and right now we're totally neutral. And it's actually going to be really tough for American markets to start a new bullish cycle because we believe that what could trigger a new bullish cycle on the SPY will be the strength of the economic indicators that will come out. Yesterday, the Fed said that so far they're not going to raise interest rate because there's still some concern concerning some pockets of the economy, industrial production, real estate. However, if ever we have some surge on those economic indicators, well then there might be a liftoff on the rate hike during the month of June. Now, if we take a look at this sector here, the industrial sector, yes, last week we talked about the industrial sector. Today, there have been, again, some breakouts in the industrial machinery sector. We have here Orbotech that I've talked to you about last week. Today, that stock, it's clearly a profit-taking opportunity if you bought it on May 14. On May 14, it was around $18. Now it's around $19.50. So it's a clear profit-taking opportunity on a stock like that. Doesn't mean you should not hold on to your rest because the stock still maintains its upward trend, so there's no need to close it, but it's a profit-taking opportunity. The stock that we're recommended on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. Well, that stock, Boulevard Acquisition, today surged as well, but we're not in a situation yet where we can take some profit since we have recommended it on May 14th. So we're letting the stock keep its rally, but we're not yet in a position where we can take some profit. We need the stock to at least go above 1240, 1235 to be in a situation where we could take some profit. There are some new breakouts today in the industrial sector, but with markets that remain neutral, a stock like Emerson Electronic, even if technically speaking it's a nice breakout, breaking us out of information, look at this. Stock is totally overbought and it's confirming a bearish divergence. Why bearish divergence? Because look, we have been higher and higher while the stochastics here have shown a lower and lower top. So this is actually a clear bearish divergence, and this makes us not believe and today's breakout on Emerson Electric. So even if there have been additional breakouts in the industrial sector, a lot of them are lacking quality. As for the other ones I've shown you, for instance, CNH Industrial, which broke out on May 14, well, today that stock is breaking out again, but I think it's just an opportunity to continue to hold on to that stock. I would not over increase my exposure on a stock like that. I think it's a good trade you did if you bought it on May 14, hold on to it. Rockwell Collins, so far the stock stays neutral. So as long as market stays neutral, I don't think that stock will rally, but only higher than 99.23, that's going to be a buy. Xylem has to be watched, higher than 37.30. And the stocks in the railway sector I've talked to you about, well, they're confirming more and more a bottom. NSC, for instance, we can say that it's a clear and clearer bottom, right? The stock is stabilizing there. As long as it doesn't go below 95.25, we can definitely say that at this price, it's going to be it's a bottom for NSC. And as for CP, we're actually also confirming a clear bottom for CP. As long as it remains above 171, which corresponds to that support, we can say that CP is actually at a bottom. Now, concerning the technology sector, though, there have been some stocks in terms of the breakout that I've shown you last week. Well, they have performed well, but on most of those positions, you should continue to hold on to them. For instance, Paychex, right? We went from what, 49.74 to 50.29, so not a big gains there, but hold on to that positions. SAP broke out on May 14, but still maintained its upward trend, so there's no need to close that position as long as it doesn't reverse its upward trend and doesn't go below $75. So it's a hold. Apple rallied well, but Apple now stays neutral. Only on the new high, Apple is going to be a buy higher than 132. IBM also as well stays neutral, and same thing too for Microsoft. So we see that The rally that we had in the industrial technology sector, though, most of those stocks are either staying neutral or have not given enough upward momentum to be able to take a profit, except for ORBK that I've shown you last week on the market report. Now, for today, the TSX has been the best performing index. Now, on the TSX, though, the energy sector has been the main responsible of that. But the thing that kind of make us be worried in the TSX is because when we see all this congestion here with all those moving average, 100-day, 50-day moving average, we kind of worry that this slight bullish cycle, how far can it go, right? There's all this former support that's there. There's a lot of congestion with the moving average. So we think that this bullish cycle can definitely be short-lived. Now, there have been some opportunities to day trade in this sector, or some opportunity to close some of your bearish positions. For instance, on marketgurus.tv, we had a position on HED around here, which we recommended among our analyst shares portfolio on marketgurus.tv. But today, what we decided to do on marketgurus.tv, we decided to close that position that totally reversed its upward trend. So if you had some short positions on the energy sector on the Canadian side, I think it's wise to close them to play defensive just in case this rally continue. Even if it's short-lived, that we could head towards 235, but it's all about minimizing your losses. Other some opportunities to day trade, yes, they have been. Actually, PWT has been our day trade of the day on our Facebook page. If we take a look at that stock here, we had one entry point here, another one there. Again, the stock is giving an entry point right now, clearly reversing an important downward trend. So it's a go for PWT with an exit point at 248. So that has been one of the best performer for day trading on the energy sector. And there are some stocks that could break out, such as Enbridge. If the stock could go above 62.85, that would be a breakout. But look, there's a top there at 65. So in terms of potential, it's really kind of limited on a stock like Enbridge. So overall, folks, this is what we have. On the industrial sector, there are some additional breakouts, such as Emerson Electric, but most of those breakouts so far are lacking quality. I think it's wiser to hold on to your current exposure. We're doing it on Boulevard Acquisition. Elsewhere, the railway stocks are starting to confirm again and again a bottom. In the technology sector, most stocks so far are either pursuing the rally or staying neutral. Really, there have not been additional breakouts in the sector since the last market report. In the energy sector, if you have some bearish exposure, close them. We did it on HED. And if you want to day trade the sector, I believe it's still a great strategy. Penn West Petroleum has been the best pick so far on the energy sector. So folks, if you want to have all those reports on a daily basis, I invite you to make the free trial of marketgurus.tv by clicking at the link below. And me, I'll see you next week for your market report. Don't forget, you can always follow us on Facebook, Twitter, chat with us, share your strategies, and never forget, the more money you make, the happier we are. See you next week.